Hey everyone, thanks for joining the webinar on the payment protection round two. This is Matt Bryson with Marketing 360. I'm also joined by my colleague Donata with Lendio. We'll just give it a couple minutes here for people to log on and then we'll kick it off. Great, why don't we get started? Brandon, if you want to control the slideshow, we can kick it off. Great, so again, thanks everyone for joining our webinar today. We're going to be talking about the payment protection round two. This is Matt Bryson. I'm the CFO here at Marketing 360. I'm also joined by a couple of other team members here at Marketing 360, Jerry Kelly, Farah Lanza, and Brandon Lilly. And then we're lucky to have our partner Donata from Lendio as well, who will be walking through this webinar with me. Here at Marketing 360, with all the complexity in round one of the PPP, we really wanted to line up a partner that had a lot of expertise with placing PPP loans for our customers. So we searched far and wide to find the best partner, and by far we thought Lendio was the best solution. Lendio was able to place over $8 billion worth of loans in the first round of PPP, and their marketplace solution will really help you get partnered with the lender who's the best for your business and has the best chance at being underwritten. Donata, do you want to give just a quick introduction to yourself?
Hi, everyone. I'm so happy to be here with all of you at a interesting time, right? When we're trying to support together the small businesses that we all serve to get access to the capital that they so desperately need. So thank you, Matt. As Matt mentioned, I lead partner and lender strategy here at Lendio. I've been at Lendio for 4 years. In the space of small business lending for longer than I wish to admit. I'm quite passionate really about serving the small and mid-sized businesses of America, especially during this time of need. Here at Lendio, as the largest small business marketplace for financing in the United States, we always honed in on this mission of fueling the American dream. We've pivoted now to saving the American dream. So we're here today with Marketing 360 to walk you through the PPP program holistically and honing in on this round two.
Great. Thanks very much. So if you guys all have questions, we're going to have a pretty lengthy Q&A session reserved at the end. But if you have questions as we're going through, feel free to put them in the Q&A section or in the chat, and we'll try to get to those questions either during the presentation or Donata and I can speak to them once we go through the presentation. Great. Brandon, if you want to move to the next slide. Just really quickly again on the two businesses, Marketing 360. I think most people on the webinar probably know us, but we're a marketing and business management software focused on small businesses. So this partnership with Lendio, was very much in line with our mission of helping small businesses grow, and again, feel really great about this partnership. We have signed up with Lendio. Brandon, you can go to the next slide. Great. So just to sort of set the stage here, first we'll be going through the PPP application process with Lendio. We'll talk about what's so special about this Lendio solution, notably their marketplace solution, the power of the dedicated loan specialist that you'll get in conjunction with Lendio, timing on receiving the funds once you submit your application, and then the process for PPP loan forgiveness. And then finally, as I mentioned earlier, we'll end with a Q&A session. Great, so I'll hand it over to you, Donata, to walk through the application process to Lendio.
Yeah, so thank you, Matt. So let's talk a little bit about, so what would the first step be? So in the landing page that either has already been provided to you or will be provided to you, you will have the ability to begin your application for a PPP loan, whether it is for a first-time loan or a second draw, as they now call it. you will have that ability to begin the application. What you can expect is that the application will take about 15 minutes to complete. And in addition to you completing this information as required by the SBA on not just the information provided and attestation required, but also documents that they require to support your application, you have what Matt noted is a dedicated loan specialist. So once you submit the application, a dedicated loan specialist will have access to your application. If your application is not complete, even if you don't engage with us to complete it, somebody will reach out to you to ensure completeness of that application. Now, it is highly advised, as we've learned from the prior rounds of PPP, that you fill out the application in its entirety to the best of your abilities and information that you have at the time, because that does speed up the process. So again, what are the main qualifications for the first time PPP loan? Your business must be up and operating or have started operating as of February 15th. This is of the prior year of 2020, right before the pandemic. You own a small business with associated payroll costs, you run a nonprofit with associated payroll costs, or you are a sole proprietor or a freelancer. And then you must certify that your business has indeed sustained economic damage due to the COVID-19 pandemic. So additionally, so specifically to the PPP loan 1, the requirement is that you have 500 employees or less. But the second draw, the way that the SBA rules read, is that your business needs to have had fewer than 300 employees. And then you need to be able to attest or show that you have had an impact of 20% reduction in your revenue for the second or third quarter of 2020. Again, you would have to compare that to the prior year, to the prior quarters in 2019. And then additionally, you must meet the eligibility of not to have exceeded the $10 million allowable in the first PPP loan. What that means is that in combination, PPP loan 1 and PPP loan 2 may not exceed $10 million together.
And in the maximum, just to add on there for PPP round 2, I believe Donata is $2 million. So this one, the SBA has really focused on the true small businesses. So that's the maximum size for round 2.
That's correct. Yes.
And I see one question in the chat around the reduction in revenue. It's 25% in the second or third quarter as compared to the previous year, not 20%. Just to answer one of the questions in the chat there.
Yes. It is 25%, and you can choose the quarter that you wish to display to qualify for that. And just to make sure, because oftentimes, there's questions around sole props specifically, right? Because their financial records aren't necessarily done via a platform provider. They're self-maintained. For loans below 150, what is required is a self-attestation, right? That you provide information to the effect that a 25% revenue reduction has been experienced.
Great.
Okay, so what happens on the Lendio side? So what does Lendio do specifically? So unlike a direct lender, where basically they have a specific flow and access to liquidity and to the Fed window, Lendio has that same construct, but with multiple lenders. So by virtue of being a marketplace and not a direct lender itself, Lendio works with multiple lenders to ensure speed of funds, right? Because we have the ability to see which lender is processing the fastest from all of our lenders in the network and divert traffic on request that way, right? So what this allows us to do is to have increased access to PPP funds in the most efficient manner because we are working with multiple lenders. Now, I do want to make sure that when we talk about submission here, when we talk about submission, the application that we receive isn't necessarily submitted to each lender, but it is evaluated and ready to go to the lender that's best displaying the fastest processing time at the time of receipt of your application, right? So it allows that if a lender has a bottleneck, for us to choose the lender that does not to place your application that way. We're not shooting the application necessarily all over just for comfort there. We're only shooting it to the lender that at the time is displaying no bottleneck and movement through the file the fastest. Okay, so let's talk about the power of a dedicated loan specialist. So this is very, very important because oftentimes, especially through what we saw in the prior rounds, when a borrower would submit an application that they believed was complete and it wasn't, if someone was not looking at that application all the way to point of underwriting, it sort of delayed the process in that file being quote unquote deemed complete. Now, with a loan specialist dedicated to each borrower, what we try to mitigate is to ensure that your package, if you will, your application package, is as complete as possible from the very beginning. In addition to that, the value of a dedicated loan specialist is also serves as someone that you can ask questions to the extent that you are not certain on what qualifies as a potential document that could be used in order to prove your eligibility for the loan. So any such questions may be directed to our loan specialist. Again, they're not necessarily advising you in any way as an accountant or as legal expert because they cannot, but they are able to point you to the right resources for you to validate such information or give you examples of what qualifies as proper documentation to back up your claim for the PPP loan. In addition, I see that you have here understanding loan forgiveness eligibility. This is something that we would be engaging in conversation with you after you receive a PPP loan. So we're always here to help, not just in the receipt of the loan from the government, but also following in your ability to obtain forgiveness, and any questions you may have, we would tackle that subsequently. Okay, so let's talk about the timing of receiving funds through the PPP. So currently, there are some dependencies that have not yet been made clear by the SBA on the length of time that it would require end-to-end for a borrower to receive funds. I can tell you that to get through the Lendio process, once a package has been completed, it takes just a matter of a couple of hours for it to be fully vetted and ready for submission to the lender. And the dependency there then lies on the ability of the SBA to approve that particular file after it has been submitted to the SBA. Currently, we are hearing that the SBA is allowing itself 48 hours to approve. However, that is not part of the rules. That is more sort of timeline expectations on approval. So after a submission has been made to the SBA, what we expect with the information we have so far is that it takes them about 48 hours to approve. Following that, what we also know is that once a file has been fully submitted to a lender has 10 calendar days to distribute the funds. What this means is once you have received a PLP number from the SBA or via Lendio from the SBA, then you can expect your funds per SBA rules to be in your account no later than 10 days, 10 business days.
I know one question that's been coming up on that, Donata, is once the loan is processed by Lendio and the bank, is the relationship with the borrower direct with the bank from there, or do they still work through Lendio? Maybe you could just speak a little bit to that dynamic. It's a question that's come up a few times, I know, on our team.
Yes, so all questions can be directed to Lendio. The only portion of the experience that Lendio will not oversee, because we don't have visibility, is the actual transaction that happens in issuance of the funds. Meaning when the funds hit your account, at that point, you can still reach out to Lendio. We will connect you or find the answers for you. But at that point, it is only the lender that is responsible for the issuance of the funds straight into your account. But you can continue to use Lendio as that resource, as we have connectivity to our lenders.
And after it's issued, to the extent that a portion of it wasn't forgiven and there was payback required, is that something the borrower would do direct with the bank, or is that something they would work through Lendio on in the future?
Yeah, so following the issuance of funds, the borrower would be working with a lender of record, right? At that point, the relationship indeed is with that lender, and Lendio no longer has visibility, right? For many reasons, including customer protection.
Sure.
And any repayment information is to be worked out directly with the lender. We can help in helping borrowers prepare for forgiveness, right? And package or answer questions. But the actual forgiveness process also happens with the lender, and only the lender will be able to confirm forgiveness.
Great.
Okay, so a couple of points, high level here, right? But again, how is a file going to be forgiven? The minimum forgiveness eligibility is as follows. 60% of the funds received must be used directly for payroll purposes, right? That's why it's called Paycheck Protection Program. It is indeed honing in on the importance of ensuring the support of payroll. Now, documentation as required by the SBA must be provided in order for forgiveness to occur, right? So the application for forgiveness must be backed by documentation. Now, to the extent that a loan is not forgiven, keep in mind that the maximum interest rate is indeed 1%.
Another thing I'd highlight here is for loans that are 150,000 or less, just to minimize the burden on the small business. The small business will just be required to make a one-page certification around what the funds were used for, that they were used for payroll, and forgiveness can be processed based off that one-page submission by the borrower. If you're above 150, you'll have to upload a more comprehensive set of forgiveness paperwork, as we note here in our presentation.
Yes, that Matt gave me an opportunity to look at the questions, because when I'm speaking, I can't see the questions that it allows me to see. And it caught my eye that it's asking what's going on with companies with one employee. Companies with one employee are companies, right? And even if that employee is yourself, you are still an entity that is eligible. And I don't know what specifically the question that you want me to answer with companies with one employees, but you are eligible, and you may file, and there, obviously we will require the documents to prove again that you meet those requirements, but at the end of the day, that is treated as an entity, so you are absolutely eligible.
And what about if a company, I know this is a question a lot of people have been asking our team, is if you have a company with multiple DBAs, is my understanding is it's based upon your EIN. So it's one application per EIN, but maybe you can speak a little bit to that, Donata.
Yes, it is one application per EIN that you are eligible. And there are rules around in combined entities, how much one can claim. So as an example, you may not exceed $20 million for a corporate group, right? So you may apply for separate loans, but as a corporate group, even under separate EINs, you may not exceed $20 million. So that would be one clear rule that dictates sort of how much you can claim or ask for a corporate group.
Great. Great. Well, I'll pause here. Brandon on the Marketing 360 team, were we going to walk through some of these FAQs that we had put together, or are we just going to open up to questions from the group?
Let's go ahead and walk through these. The FAQs through this presentation are some of the literally the most frequently asked questions. So let's walk through these quick, and then we'll open it up to Q&A.
Great.
Okay, so will somebody help guide me?
Sure. Yeah, do you want me to,
yes.
What's the best way to do this, Donata? Do you want me to just ask
Why don't you highlight the questions we should answer first, and then we'll tackle them.
Yeah, absolutely. I think we've answered some of these. So the first one here is just, when will the PPP extension happen? It's here, it's live, but maybe Donata, you can talk a little bit to, when applications will be processed. We're encouraging people to apply as soon as possible, so to get onto the landing page and fill out the application, but maybe you can speak a little bit to when they'll actually be processed.
Yes, absolutely. Happy to do that. So it is a little bit different this round than the prior round. So let me kind of explain the nuance. The PPP round is indeed here. It is live. The SBA is today accepting applications, but not for everyone. So who are they accepting applications for? As of today, it started on Monday and it will be going on through end of day today. Only institutions labeled as CDFIs are able to submit applications to the SBA. What does that mean? These are certified development financial institutions that service underserved communities generally, that are able to have applications submitted. Lendio works with such institutions. So Lendio has indeed started submitting applications via these institutions to the SBA. Again, the customer that those institutions service, it is, you have to meet certain eligibility criteria to be part of what they deem is an underserved community, such as women-owned businesses and different Black and Latino community CDFIs. So these are very much sort of honed in on the underserved. Now, starting tomorrow, the gamut of financial institutions who can participate widens to include CFIs. These are community financial institutions, as defined as those financial institutions with less than $1 billion in assets. Again, Lendio will continue to now work with our CFI partners. This is the value of the marketplace versus one lender, right? So Lendio will now open the gamut of those financial institutions that fit that criteria and work with those. Now, it is not a defined time, but we are expected that on Tuesday of next week, all financial institutions may be able to submit. I emphasize this is not an actual launch date because we continue to get guidance, but it is expected that Tuesday is when they open the floodgates, if you will, right? To where all financial institutions then are able to apply. But as Matt mentioned, we are encouraging all of you to submit your application because it allows us to review it and ensure that it is complete. So when your entity is eligible for submission based on various criteria, then we can immediately submit it.
Great. The next question is just around how much is available in the new round of PPP. So Congress has allocated $285 billion for round 2 of the PPP, which sounds like a lot of money, but I think we know from the first round that at least in the first phase of it, a lot of that was sort of on a first come, first served basis. So again, just to reiterate, we're encouraging people to apply as soon as possible for the loan.
Yes.
Anything to add to that, Donata?
No, nothing to add. The only thing is, again, not as a hard rule. We remember from round 1, the money was exhausted in just a matter of a couple of days. That's not what is expected during this time, but nonetheless, we just don't know that this is going to last through end of March, right, when the program ends. So the sooner you get in your application, the better.
This next one's a pretty common question we're getting, which is how much can you receive for a second PPP loan? So for the majority of businesses, the calculation is 2.5 times their average monthly payroll costs. And those payroll costs can be calculated using one of the following, either the 12 previous months prior to the loan, calendar year 2019, or calendar year 2020. There's an exception that's been made for certain hospitality businesses where they're able to borrow up to 3.5 times their average monthly payroll costs. And then the only other two exceptions that I'd highlight, and Donata may have some more, are seasonal businesses. So for seasonal businesses, they can do the calculation based on average total monthly payroll for any 12-week period between February 15th of 2019 and February 15th of 2020. So if you're a seasonal business that has a higher payroll in the summer, you'd want to calculate it off of that to maximize your loan availability. And then for new businesses, so businesses that were in operation as of February 15th, 2020, another calculation that they can use is total payroll costs that they've incurred divided by the number of months those costs were paid out. So that's just a little bit more information on how much you can draw. But Donata, I'm sure you have some more commentary on this, as it's a really common question we're getting.
Yes, absolutely. So the thing that I would add, Matt, to your summary is that if you're really wondering if you're eligible for that 3.5 times instead of 2.5 times, one way to look at it is if your business NICS code starts with 72, you may qualify for up to 3.5 times, not 2.5 times for the second draw. So keep that in mind. So if you're a hospitality business and your NICS code is 72, you would qualify for 3.5 times. Now, one additional change this round that wasn't the case before is that there's additional eligible businesses for funding, such as news organizations, some hospitals that are owned by government entities, businesses that receive legal gaming revenue if they meet applicable requirements, so more drilling down on that particular one. Electronic, telephone, housing, and cooperatives, 501c organizations are as well included, tribal businesses, destination marketing organizations, and also faith-based organizations. So again, this is a change from the program prior. These entities that I just noted are now also eligible to participate.
Great. There's a question I saw in the chat around NICS code. So I'm just going to post a link here in the chat, which is a directory of NAICS code. So as Donata mentioned, if your starts with 72, that's where you'd be eligible for 3.5 times your payroll. So it's based on the directory of codes that we just put into the chat.
Okay.
One other question I saw, Donata, is just around payroll costs. You know, some businesses that are LLCs may pay some of their owners or employees via K-1 income or distributions as opposed to W-2. Is the SBA making a distinction between how payroll is paid, whether it's on W-2 wages or K-1 or guaranteed payments?
No, they are not making a distinction. So long as you have proof of payment, at least no information has been ever released by the SBA that a distinction would be made on form of payment.
Great. There's a question here, Donata, around what protections have been added to the PPP. So we covered the first one, which is related to hospitality businesses and their opportunity to receive 3.5 times their monthly payroll. There's also some around live event and production companies. And then there's a special $12 billion that's been earmarked as well. If you want to just cover that quickly, we'd appreciate it.
Yeah, so as you recall, I talked about the CDFIs that are mission driven into the BPOC population. 12 billion out of the total stimulus funds for PPP has indeed been earmarked for that particular population. So, and it will be distributed largely via the CDFIs that are honing in on the underserved population.
Great. The next question is Lendio a PPP lender? So
Yes.
You can cover this, Donato. We really think, again, at Marketing 360, we did a lot of work looking for a partner and think the solution Lendio has is very unique and really the best to help you all get your loans placed. But if you want to cover that again, Donato, that would be great.
Yeah, absolutely. So as I noted earlier, Lendio is not a direct lender. Lendio, it is a marketplace. Even in our business as usual, we're a marketplace of an array of loans. In this case, we are a marketplace of different lenders that offer now the same product, which is PPP loans, right? So our ability to work with multiple lenders to ensure placement of your loan request and your application is really the core of our value proposition. And then in addition to that is to have a dedicated process, a streamlined application, but then a dedicated agent to help support your application is core to our value proposition and how we work with borrowers.
Great, thank you. So the next one's around how long does the SBA take to process the application once submitted? So I think you covered this earlier, but maybe just a quick recap on it.
Yeah, really quickly, the expectation now is that it will be 48 hours. That is not a rule, that is a guidance. So there is a big difference, meaning for lenders to issue funds, it is a rule that they have to issue funds within 10 business days. For the SBA, it is an expectation that it'll take 48 hours, but we will see if that is the case. Great.
Next question is around, can a borrower be denied a PPP loan after being issued a PLP number?
The answer is yes. We saw this in round one. There's various reasons why this could happen. Fraud is one of them. But to the extent that it is a legitimate request, it could be a mistake in a fraud flag or this, but again, this is a very rare occurrence, but we did see this happen in the prior rounds of PPP. Largely, it was identification of fraud that made it halted after a PLP had been received.
Great. Okay, that concludes our FAQ section. So Farah, I'm wondering if we want to just open it up to questions from here.
Yep, there's a ton for you to start answering in the Q&A box.
Okay, great. So I'll take a first crack at reading some of these off, Donato, and then we can sort of tag team the answers, but I'll let you kick it off. So the first question is, the application says on the calculation sheet 2019 or 2020 payroll reports, and then it says to upload the 2020 941s. What would be the point of sending the 2020 941s if you use the 2019 payroll reports?
That may be a typo.
Yeah. You know, Farah, that question just disappeared for me. I want to make sure I'm following the question completely.
I think she's moving them to answered as we're tackling them. I think that's what's happening. I will check on this one, but again, the requirement really is on prior. It is not on the current. So that's for me to follow up. Yeah.
Yeah, and you as the applier can choose which period you use, whether it's the last 12 months period, 2019 or 2020. So my understanding is you would upload the 941s associated with the period you choose, but we can follow up with people on that one. The next question is, so in the first round, I know that a lot of the payroll was capped at 100K for purposes of forgiveness. Is that similar in round two?
It is, yes. That same rule applies.
Okay, great. And the person who asked said that caused a lot of complexity from a reporting perspective. So one thing I'd highlight is if you are using ADP, Paycom, or one of the larger payroll providers, maybe you're not, but if you are, a lot of those payroll companies actually have these reports canned and available for you. So to the extent you're using a provider for payroll, I would encourage you to ask them if they're helping to prepare these reports, because that does help streamline the process at times. The next question is, how does it look for companies that work with 1099 contractors? Are they eligible for payroll costs and for purposes of forgiveness?
So 1099 has a complexity of its own. 1099 are not considered employees of the company, so they may not be included in that process. So I know that we had a lot of customers who did expect that, and they reported it, and then we had to clean up a lot of applications under this scenario. But the government is not looking at the 1099 as a direct employee of the company. So a 1099 would not be counted as an employee.
Got it. The next question is just around the time frame where an applicant must spend their funds that they get via PPP loan. So that the question is, I assume this is for forgiveness purposes. Is it all forward-looking, or could some of the funds be used to pay payroll that was missed in late 2020?
There is no distinction or definition, at least by the SBA, on the funds used for payroll. We do know that eligibility for forgiveness is within 4 months, but there's no rule distinction whether it's forward or for the prior payroll periods. I think the burden lies on the fact that one must prove that 60% have indeed been used for payroll.
Right. Next question says, I haven't seen where it asks for bank statements. Where is this request? I think that mainly the bank statements can be used to show the revenue. So part of the certification is that you showed revenue drop by 25% or more during one of the quarters in 2020. So to the extent that you don't have a financial reporting system, bank statements would just be an alternative for you to show that. Not any other color on that?
Yeah, this is important for businesses who are under 150K, and more of a practical question, a practical answer based on what we see most of the time for those businesses who are requesting loans under 150K, is that the information provided is self-reported, right? So within the Lendio website or Lendio application flow, you report the information as you maintain it in your own records, and then a report is generated to capture that information. So the burden really is on the borrower to ensure that they indeed qualify, right? It isn't to necessarily provide the actual statements, right, or the bank information for loans under 150. For loans over 150, we do have to have document validation to support those loans. Again, if you are self-maintaining the records for below 150, you self-attest to the information. We have a lot of borrowers that fall in that category, so I just want to clarify that.
Absolutely, thank you. The next question is just, if you reported a loss on your taxes for 2020, are you able to get any funds? The answer is yes, right? There's no distinction made between profitability of your company and eligibility. It's all just going to be based on payroll and your revenue performance in 2020.
Yep, that's correct.
There's two questions here that are just asking about 2.5 times payroll from what period and how the loan will be calculated. So again, it's 2.5 times your payroll for most businesses from either 2019, 2020, or the last 12 months. If your NAIC code starts with 7.2 and you're in hospitality, you could qualify for 3.5 times. And then there's some distinctions that we covered earlier for seasonal businesses where they're able to choose any sort of 12-month period within the last year, or for new businesses who can calculate it based off of total months divided by total payroll costs.
Yep, nothing to add there. That was a good summary.
So there's a question here. someone who's a realtor that employs 3 assistants, and they're saying real estate does fall under financial services, would they still qualify?
I'm sort of in a difficult position, right? Because then it appears like legal advice of some sort,
Sure.
so I want to be careful. A lot depends on your NICS code, right? So the triggers for the SBA just to ensure whether you're eligible or not are largely based on the NICS code. Now, if you're operating as a real estate company, again, that would qualify. However, if your NICS code does indeed sort of push you as a financial service company, that may trigger a disqualification. I know, again, I'm not offering any legal advice here, but I know that we have had cases where legal input has been provided along with the application to basically support that the company is eligible despite of what the NICS code indicates. And there have been cases where that's been accepted and cases where that has not. But keep that in mind, that to the extent that you provide case law or some legal input to where why your entity would be eligible, there have been cases where that has been accepted despite the NICS code being a trigger of disqualification.
Great. There's a question here for a participant. Her business partner and the individual are the only 2 people at the company, and they haven't been running payroll at all in 2020. They're wondering if they're allowed to use the PPP loan for back pay and to pay down debt.
I can't opine on that.
Okay, no problem. There's a question: how does forgiveness work if the loan amount is less than 150,000 and the number of employees at the beginning and end of the loan period is 0?
Well, there is. Well, the entity would have at least 1 employee, I would assume, right?
Oh, yeah, or maybe it's a sole proprietorship. Potentially.
Yeah, I would think that's what they're referring, right?
Yeah.
So in the sole prop, or frankly, any entity that is under 150K for loan forgiveness, the burden is relatively low in requirement, right? So long as you are showing that those funds are indeed or have been used for the purposes of payroll in some way, shape, or form, then forgiveness would be granted by the government. The burden of proof for forgiveness on loans under 150 is relatively low in the providing of documentation. So it's not really extensive in document providing. I hope that helps. If not, if you have further questions from that, please input it.
Yeah, there's a similar question here around what kind of paperwork is needed for payroll for a sole proprietorship.
I mean, any documentation that indicates that there was a payment made for purposes of payroll.
Got it.
So think of this way. The government is allowing businesses quite a bit of leeway on how to show that. And the burden lies on self-attestation, more so than multiple documents provided to prove it.
Got it. Another sort of similar question here. The participant says they started their application and they're stuck on the payroll cost question. They're wondering, is it just asking me how much did I make in 2020, or is it asking me to decide how much I should have made? I'm a sole proprietor and I do not have a set salary amount per year other than what goals I try to make. I'm so confused. Please help.
So is the question if they should report how much they made or how much they should have made?
Yeah, they're just, I think they're saying that it's a sole proprietor, so the only payroll would really be to themselves. So they're asking how much can we report as payroll?
Well, you can only report what's factual, right? So
Right.
For 2020, you would report what is factually made versus the expected. At no time will the process or the application really ask you for expected. It's only numbers that are factual, that occurred.
There's a question here where the participant says their fourth quarter payroll is significantly greater than the 3 prior quarters. They're wondering if there's any special consideration given. The only sort of consideration I could think of here is if this business qualifies as a seasonal business, they could certainly report on their highest 12-week period. Otherwise, they'd have to either report on 2020, 2019, or the last 12-month period.
That's correct. Yes. Yeah. That's absolutely. And you can choose the quarter that you wish to use, right?
Right.
For purposes of eligibility. So you're not dictated to use a particular quarter.
There's a question here from a virtual assistant who has multiple clients who have been asking the assistant to help them apply, wondering if they'll have one loan specialist at Lendio or if they'll have one for each client.
So each, each customer. So we dedicate the loan specialist to the customer, not to the sort of referral partner, if you will.
Right.
Yeah. So and it is based on the queue. It's first in, whoever is available will be your assigned rep, right? So we can't really dictate sort of a routing to that. You're going to get the first available rep.
Great. There's a question here around applying for multiple businesses that an individual might own.
Mm-hmm. Yeah, so as I noted earlier, the only restriction on that particular one is that as a corp, right, you may not exceed $20 million. Otherwise, you are able to apply for each entity separate.
Got it. There's a question here around the calculation of the 2.5 times monthly payroll. Is that for the year or only 1 month? It would be the average for whatever period you choose, whether that's 2019, 2020, the last 12 months, or if you're seasonal, the 12-week period that you choose.
That's correct.
There's a question here around if you are not approved for the amount you asked for, will they adjust the amount that you can get or will they just deny it? I think the question really is if it's determined that your calculation is incorrect, will you just be denied or will Lendio help you get the loan for the amount that you really should have gotten?
Yeah, so Lendio will prepare you to ensure that you are able to prove what you qualify for. To the extent that you get through the process and through underwriting, it is deemed that it is another loan size that you would be eligible for, then you would be contacted back and required to make a change into the application with a new amount. Your loan docs would reflect the amount that you're eligible, not the amount that you request. I hope that makes sense. So if I am eligible for 20,000, but I requested 30, through the quote unquote underwriting, it will be determined that it is not the 30, it is the 20. Hence, you would be contacted, you would be let know that and as to why. And then the loan documentation offered to you would reflect that 20, not the 30 that you requested. And then obviously it's up to you whether you wish to sign that or engage in conversation to have that amount changed.
Great. There's a question here. If you're in business on February 15th, 2020, but didn't have a payroll until March, are you still eligible?
Yes. Yes.
Right.
So the requirement on February 15th is the establishment. So you were operating, right? So if you started operating, I don't know, February 14th, but your payroll obviously was subsequent to operating and ended up being at the beginning of March, right? Then yes.
Great. This is a question that we've been getting here at Marketing 360, and that is, would it benefit the applicant to apply through the same bank or through the same lender that they got funding in round one with, or should they apply through Lendio? Is there any sort of prejudice to the borrower through applying through multiple channels? Would love to get your thoughts on that one.
Yeah, no, just like in prior rounds, there is no prejudice. there's no downside for certain to reapplying with the same lender, right? So I encourage that, right? If you already got a loan with a lender, there's no downside. Again, at Lendio, we offer you all of the benefits that we outlined, but at the end of the day, you would have the same eligibility, the same rules apply no matter who the lender looks at the file. So there is no downside to reapplying with the previous lender, for sure.
Great. There's a question on the 100K cap. Do you mind just covering how that works in practice? There's been a couple of questions around that.
On the 100K cap on employee
yes.
salary.
Compensation.
Yeah. So regardless of what the salary of an employee is, you may not exceed a claim past that employee making 100,000. So what does that mean? So if you have 3 employees who make $120,000, what you are able to calculate for each of those 3 is up to 100, right? So your claim needs to be based on the 300 total, not 360.
And is it just based on the compensation, the salary costs, and any sort of associated commission, or does that include things like payroll taxes, benefits, and whatnot?
Yeah, it does include payroll taxes and benefits. So if you contributed to a 401k of an employee, that is part, you may consider that as part of the contribution, actually.
Got it.
So,
there's a question.
By the way, not everyone knows that. So that is a good question. That is a benefit. So you are able to claim benefits contribute to employees in addition to payroll.
There's a question here, what other expenses can be used other than payroll? So I think I'll try to ascertain what's being asked, but for purposes of loan eligibility and how much you receive, it's payroll. I think there's some different qualifications around forgiveness, which maybe you can speak to, Donata, but I believe the question is probably around forgiveness because the loan amount is going to be based on payroll.
So is the question outside of payroll, what else could the funds be used for?
Yeah, that will be forgivable is what I think the question is asking.
Yeah, so they did include operational expenses such as utilities as part of the forgivable amount, right? So you would be eligible to be forgiven so long as those were utility expenses. So anything that falls under utility, I don't know, electricity, so on and so forth, are also forgivable expenses and would be counted.
Right. There's a question around the concept of operating date and what that is meant to imply. Maybe you can just speak to that a little bit. Is it when the registration with the Secretary of State was complete, when you started earning revenue, or just when you started working?
So the SBA isn't necessarily defining what the business in operation specifically means, right? The entity must have been established prior, right, to that date, February 15th. Outside of that, again, the definition is open to saying you are up and running as a business. What that means is specific to each individual business. They don't have a further definition of it, at least in the rules.
Great. There's a question here on the forgiveness period. How many weeks has the SBA given guidance over under how many weeks it is for round 2?
So yeah, the program ends in March, right? Or until the funds are depleted, whatever comes first.
And I think the other question here is just the forgiveness period, or what's sometimes referred to as the covered period for purposes of whether or not your loan will be forgiven. I think it was 24 weeks in round 1. Is it the same in round 2?
Yeah, the guidance for round 2 forgiveness, or the time frame, to my knowledge, has not been issued yet. It is expected to be similar as the prior round, but it was not addressed in the language of the guidelines.
Got it. Probably have time for another question or two, so I'm just flipping through these questions here. There's a couple questions on how to reach us for further questions or further guidance. Farrah, do you want to tackle that one? Nope, no problem. Yeah, so if you have further questions, we're going to be sending out an email afterwards, which recaps the webinar. We'll also have access to our landing page where you can get information on how to fill out the application. If you're an existing Marketing 360 customer, you can of course talk to your contact, your marketing executive, and then just otherwise just sort of feel free to reach out to anyone at the company for more questions.
Yeah, and I don't know, Matt, we would welcome sort of if you can collect additional questions that come in.
Absolutely.
What I can assure is that my team will be able to answer each of those, and we could have another follow-up FAQ with the audience.
Great. There's a question here. If you're a DBA and don't have an EIN number, can you apply? Kind of confused about that one, I think.
So how would you not have if you are an operating entity, you would have an EIN number unless you are, well, EIN number isn't necessarily required if that is what the question is, right? So yes, you can apply. The short answer is I'm confused of why that was the case, but it is not a requirement so long as you have an entity, well, it's a sole prop or otherwise.
Great. Probably time for one more question here. So this potential applicant was on a webinar and heard that if they purchased an active business and reopened or renamed after February 15th, that they could still qualify. They're wondering what our understanding is on that. So again, if they purchased an active business and or I guess reopened or renamed the business after February 15th, can they still apply under the I guess the previous name?
So again, this goes under that other gray one where it becomes like almost offering legal advice.
Sure.
I just want to make sure you can apply whether you're eligible or not. It's to be seen, right? And again, so long as you attest to the information required correctly and you're providing that correctly and honestly, then your eligibility would be sorted out. But here, because it is a bit gray, I feel like I would be offering legal advice, which I'm not certified to do.
Yeah, understood. Great. Why don't we wrap up? So thanks everyone for joining. We're really excited again to be offering this program in conjunction with Lendio and are encouraging people to apply as soon as possible for the PPP loan. We'll be sending out an email to all participants after this email with a recap of the conversation, as well as another link to that landing page. And then if there's other questions, as Donata mentioned, we're happy to answer them. So feel free to reach out to us either through your marketing executive or directly to Marketing 360, and we'll try to get those questions answered. Brandon, Jerry, any sort of concluding thoughts from you on the Marketing 360 side?
Nope.
Okay. The only thing I would say is thank you so much. I do see Holly asking if a 941 is required. No, there are other ways to show. So if you're a sole prop and don't have a 941, you're still eligible. There's other ways to prove documentation. So I squeezed one more, but thank you.